Good morning. All right, a little bit of stabilization this morning, not a big deal. Started with the futures, wide range bar yesterday, breaking the lows. So little acceleration, typically gets deceleration after that momentum. What should happen, again, we're looking at the futures. We got to get back to SPX and SPY. Little stabilization in the next down move. The thinking is, as prices came down here as quickly as they did, they stabilize, get a little extended, however you want to measure that. They bounce up some degree and then come back down again. So when they go sideways like that and they don't bounce up, longs throw in the towel and some selling comes in again. So I guess this morning, interest rates, you can see red, they're down a little bit here. Crude oil's down a little bit. It's like, well, look, dollar must be down a little bit. So technically a little bit of a reprieve from pressures of the selling. We'll see how far today goes. Futures are on some support here. Really not that significant because there's kind of a wide whippy area. So this is more important. I'll just see. Yeah, got this large open interest in puts down at 4,200. That doesn't expire for another 16 days, so later this month. But there's a bunch of bets, down here on SPX at we'll get to that. Anyway, so a little stabilization there. SPY still above the 200. It hasn't reached the support yet. Push up. So always look at how far it's gapping. How far up is it gapping into the prior day? And there's still 25 minutes to go. So a lot can happen at that point in time, but it is trending up. A little pullback there. This is 24 hours. This is not the 15-minute chart. So bottoming pattern, it isn't to avoid because it's a wide range bar the day before. Right? Wide range bar, momentum moving a smaller time frame. And so this is overnight trading that it made this bottom. So lower volume, how much significance do you give in there? I really don't know. I guess just the fact that the 24-hour is trending up here near support, buyers will step up and we'll see what happens. And ultimately, I shouldn't say ultimately, but historically, when the 200 is that close, it just tends to be where it's going to go. It's going to tag it, maybe break below it. So for today, we'll see how far it might be able to retrace into yesterday's red bar. And just looking here. So the drop came in the morning. It was just kind of chopping around all afternoon after 12 o'clock. And let's see again where we're at here. Not too far into the red bar, maybe just less than halfway. And let's just see here. Just checking numbers. I still got the alert there. Ranges are opening up a little bit. But, neither area was touched yesterday. I'm just going to move this over here for now. Either strike. Got close. This is the one I felt was the no-brainer to get all the way down there. Anyway, today is 41.75, even lower. Interesting. For it to be lower while the market is moving up, usually it would not be. So it's a little bit more bearish sentiment. I would read it into that 42.90. 290. 42.95, 42.90, 42.95. That's too close. So even though it's here, to get back, it's still got to get down past the 200 MA. So 41.75, I think, is the better selection, even though eventually it seems the market is going to go lower. Yeah, Don, on social media there. Yeah, on the JOLTS report. But the last time, this was the last time the JOLTS report, it ripped higher. So these economic reports, the market reacts differently day to day. It's, use the analogy, if those of you that haven't been doing this for a while, use the term years ago, market makers or institutions are acting like SOS bandits. Right? But what's a SOS bandit? Well, this is when many years ago, people discovered what was called the small order execution system, where individuals could place trades themselves. And it became a big deal back in that time, where people, they weren't even looking at charts. They just look at level 2 screens, and they would call it trading to grind out teenies, right? A 16th of a point, bidding and offering on level 2 and eighths and such. And so, a SOS bandit, first of all, was taking the money out of the market makers' coffers, so to speak, and they were getting very frustrated that the technology was there that retail people could compete with them. But a SOS bandit was someone, not only a bandit from a market maker's perspective, but very, very actively trading, like an extremely nervous trader. So, all right. So odds are neither one of these will get taken out, but the downside with the 200 down below, a little support there, should be fine. Interesting. This is holding here, right? So the NASDAQ tech continues to show relative strength. And that's a plus it's a plus. It is a plus as long as it holds, right? Everything that begins to form a bullish pattern is a plus as long as it holds and doesn't break, because if it does break, it's going to break violently, because this communicates that institutions are stepping up here, believing that this is the place to buy because it's going to go higher. Now, it was a wide range bar down yesterday, and them holding it here, it was just the beginning of the day, but if they hold it here and this turns in, it really wouldn't be a 1, 2, 3 with a pattern like this. But look, there's a void here. So if the markets don't hold this area, I suspect there's going to be a bit of a downdraft because of the way it's trading here, and the fact is there's this void down below. So the Qs, looking at the ETF, they came into this, couldn't fill the gap, came back down. It's in an uptrend here today. Probably going to be one of those days where buyers and sellers kind of see how far they can push things one way or another, and kind of try and figure out whether maybe you can make somewhat of a substantial move. Well, this is holding here, because right now it's just kind of smack in the middle of the range, or about where this minor resistance is, right, give or take. So starting off in a neutral structure. Transports are down. This is the ETF. It's broken down. The alerts down here. The index with the 20 stocks just penetrated the 200 on a closing basis yesterday. So that's interesting, kind of grinding its way lower. I don't think it's at its destination yet. And the Dow, that's heading down toward that major support area. Got a little ways more to go. See the bottoming tail bars there. We can't tell how much this is up, what it's doing. And the Russell is almost there. So we're getting close to these destinations. And today in MT Live, we'll cover some stuff that supports this possibility of, a short-term turn. Ideally, it snaps lower, because those are the much more reliable types of turns where you get that initial capitulation and then it reverses. So something ugly and scary down into the support area. And Bitcoin, that is all over the damn place. Big day, and gets knocked back down. It's got work to do, but anyway, that is not something I personally would be attracted to trade, but not from a daily chart anyway. That's for sure. Gold has been getting slammed. It's beginning to stabilize here as it gets closer to that swing low to the left. Silver got crushed after attempting to go higher, and $20 should be in the cards. Crude oil's down a little bit. Last week, we spoke about the slowing momentum that was occurring in this area of price resistance. So a little reprieve like this for the markets with, the inflation information backing off a little bit, oil backing off a little bit. Call that backing off. Anyway, I guess it's a little extended and moving lower. Crude oil and the dollar, well, and backing down a little bit. So just a technical reprieve for the markets to be up here a little bit this morning. Nothing of great significance yet. We'll see how it unfolds today. All yours, Dan.
Good morning.
And we'll cover internals at lunchtime today. They're supportive of a turn, and why I titled, one of the reasons why I titled today's pre-market a capitulation and turn any day now. So
Debbie, our California princess, welcome. Yeah, good MT Live today. Well, I'm honored. So yeah, I said in last night's video, just in a different way than Greg did, this is a breakdown from 6-day consolidation. Sure, people are looking at that, but I want this additional downdraft. We're here, 200s in alignment with minor support on the spiders. I want to come to the bottom of the range and actually get the internals more cooked. Farther from 20, the little shock element, and then it'd be kind of a measured move, because as of right now, we don't have a void on the daily. This is just a bounce into a nasty area. So, the market doesn't care what we want, but we're describing ideally what would be great. But let's say it does just bobble around and refuse to go down, and another bullish pattern would be it comes up here to resistance, goes sideways, and gives us an inverse head and shoulders. But that would take over a week or so to set up. So we'll take it day by day, like always. We always find individual better stocks than we do Unless we nail the entry on the ETF, which we do all the time. You know, right here, this engulfing bar, this was Fed day. That was Fed day into the close. I usually have a general rule that says wait for an hour the next day to make sure you have follow through on your bias on Fed closing day. And I made an exception this day. I said, that's such a bearish reversal. Charts confirm it. Enter your shorts now. Stop over the high. So that's an example where, yeah, you know, we nailed the turn in the ETF. Let's see. Coke, we're in trail mode. This sector has been getting killed in discretionary and staples. I don't know why, actually. We also have Rawlings. I just sent out an alert. This was in the weekend letter. We've been in this short since Monday morning. We're getting a beautiful gap down here. So another beautiful example of us picking shorts that are superior to the broader market. So that one, here, let me type them a note, because I said, here, let me give it to you again. 1 second. Let me, for our subscribers, take precedence. Cover that one. Even pre-market, that's the change I'm making. So, you know, this Rawlings dipped down. So if we can get filled the next third lot, 35.25 down here, that's home run. Then we'll just go into trail mode on the last third. Couple of earnings here, nothing significant. Banks start off earnings. JP Morgan will be starting it off here in a week or two. Yeah, I think 2 weeks. These are earnings right here. Ango gapping up, bottoming pattern. Put spread idea. Healy, now ignoring earnings and ignoring the gap. This is a beautiful, beautiful closing breakout that if it opened flat, let's say short the low. Short the low, stop the high, initial target 200, maybe lower. Look at that bearish continuation on the weekly. I don't know where this is going to stop. But the gap's messing it up. AYI trades very sloppy. I can't tell where it's gapping. We'll come back to you. RPM gapping up here to 99. Put spread watch. I have it here in the middle chart. I see here I have Intel. This was on my watch list yesterday. Closed with a topping tail though, but now it's gapping up over yesterday's high. So I said 30-minute high put spread idea, but the more it goes, the less likely we're going to get filled. GM, I read in the journal, they got a $6 billion renewed line of credit. And so I don't care about that. But do you think I'm going to read that article? No, why do I care? But I'm going to pull up the chart and see what's going on. And daily, weekly, monthly look horrible. And we know they're in the middle of these strikes. And we will trade during news like that, just with knowledge of the resolution of it is likely going to be a mover. Check Ford. I mean, look at Ford. That's a sell setup bear flag. Now it's not a great one because you got all the support down here on the weekly, but they're ugly. So call spreads. Look at that. What do you think the chance of this getting above 1260 is by next week? I say pretty darn low. So go through your checklist, see if there's any premium up there pending news, and that's how we find credit spreads. banks, I knew the sector was down, but some individual banks, look at Goldman yesterday, JP Morgan, I'm looking at BAC because some guy on CNBC was saying that BAC is trading like a regional bank now. Because, all right, we just met our target in Rawlings pre-market, just hit 35.20. So excellent trade there. We're still in the third. He said, they got these bond losses also with rising interest rates. He said, stay away from banks for now. But I don't know, said something fundamental about 80% of book value, whatever, which means absolutely nothing to me unless I have a confirming pattern. And this is, I don't know if Sam's here. Sam, you know about nasty crack, right? This is a nasty crack. All time frames. That's ugly. Ugly head and shoulders on Ford. No. No, that's not a head and shoulders, Robert. I'll show you one when I see it throughout the morning session. No, that's just a vanilla breakdown with an upside shakeout. There's no shoulders. No, that is not a head and shoulders. All right, CNBC was talking about all these production cuts in oil with Saudi. And so just like I said with GM, let me see what the chart looks like. So these were big topping patterns. We were looking for call spreads on Friday and Monday, and there was no juice, but oil got extended ahead of itself. And it's interesting to me that I think whoever was on the news, CNBC guy, saying it equivalated to 3.3 million barrels a day cut. And so I expected a small gap up. But it still looks lower, so I got no interest in oil here. Apple got a downgrade. It could be a call spread under yesterday's low. It's kind of gapping right near the low. I'll keep an eye on it, as I always do with all things. What? Texan is a short watch, just getting on board a moving train. Yesterday's bar, they're showing that it's still weak. Delta thoughts on TT call spread. The problem, Delta 20, using our approach, this is a fluid move down. We like doing them over major resistance and pivots. So you would have to go over 208 and give it a big stop. And I don't think you're going to get premium up there. Just hypothetically compare that to the Ford I talked about. See how there's a wall, a mega wall of resistance right there. But that's a strike I'd be looking for on Ford. And TT, it's down 3 fluid bars, greater than 100% retracement. So that's not ideal. Triple M Pavel, it's been a continuation. Look, he says, but looking for a bottom. Pavel, I forget if you're in the green room or not. I guess not, because you're typing here on YouTube. You used to be that, because I know your name. I was going to say, come into the green room, and I have a dozen stocks that are killed that I'm watching for reversals, but there is zero sign of reversal on Triple M right now. But things that are down a lot, I have 20 I'm watching. Restoration Hardware, SID-G, Chewy, JetBlue, the list goes on and on. Pod, look at this. I've been watching this since this gap down. So if you want email support, we'll get you back in the green room for a week. and we can look for bottoming patterns. This leftover list from yesterday. FN, incredible relative strength here. Talking about Climbos, Pavel, we do trade them. This was one of our favorites yesterday, XLU. And I even reviewed this pre-market. If you were in YouTube yesterday, you'll remember this. I said very clearly, I saw the small gap down yesterday. I said, ideally, it'll make a new low, stabilize, and give us an inverse head and shoulders. Did I get that exactly what I wanted? That was a Christmas gift of what I predicted pre-market yesterday. The only problem was your entry was this 1, 2, 3 right here, which was over lunch. See, 1, 2 o'clock. I don't like putting on new trades over lunch, and I wasn't here, but that was your entry, big old void. Oh, Robert, this is an inverse head and shoulders. Look, left shoulder, head, rallies back up to resistance. It's just a smaller right shoulder, but it's still a head and shoulders. Look, there's your horizontal neckline, and my breakout with this 1, 2, 3. So even for a day trade, that was your entry stop, I'd say, under these two little bottoming tails right here. And then, you know, that was easy management into the close for a day trade. All right, Pavel, so see you in the green room. RHI. I think Sam, I am mentioning this as a possible put spread idea. And W I have as a call spread idea, a sell setup. Expo, I'm watching as a continuation breakdown. Dunking was a call spread candidate, but now it's ugly. WMG, and I discussed this one yesterday also because somebody in YouTube asked me about it. And I think it was Raul, whatever, doesn't matter. And they said, hey, Dan, what about shorting under Monday? Shorting under Monday's low. And I said, well, yes, but I said, here's your problem. It's gapping up, so it's going to be extended on an intraday chart if it does that. Oh, voila, look what happened. Look what happened. Here's your gap up, gave it all up, extended 15-minute chart, but it's weak. So that's why I posted this as a call spread idea for our subscribers. It could be a short also, but I gave this one. So here, I'll give you a trade we gave subscribers. So now it triggered, that's step one. Step two, obviously, is saying if we're anywhere near that, you know, that 40-cent midpoint. All right, I see Coke rallying here a little bit. We're in trail mode on our final third. So I go to my option table. Oh man, the spreads are preposterous. Man, the 32 calls are 35 by 320. So that is nasty. So I'm going to tell our subscribers to hold off because we only want to trade liquid. Look at Intel bottom right coming in. So I will still watch this, but man, oh man, did those spreads get nasty. Now, if for some reason you got filled, it's totally fine. Wait, 30. Wait, these spreads are the third. Okay, so now it's 40 by 80. So 32, 34. Hey, now it's 45. So let's watch it. I see RPM. I got Intel on the other computer. I'm going to put WMG there. As long as WMG doesn't go up to, let's say, 3150, then I'm still okay with the call spread.